Hello everyone. Today I have really good news today because the the Solana share it jumped up really high, jumped up about $10 today. So it went from about like 76 or so and went up to 86, and now it stay at 85.42. 85.42. So instead of losing today, I'm gaining. I'm making like $1,731.90. So yeah, like I said, today's good news. And because when we bought $82, about 400 share. Now the price is 85 and we have 403 share. We have more share and the price is more, but it's still in May the price it went up to like 95, 96, and I make like $6,000. So it's still low compared to May, but it's a start because now I'm kind of like out the hole now. I dig myself out the hole. So my first guess was 77 at the end of this month. And then when it go past 77, I'm like, okay, we go 80. And then when it went past 80 to 82, so I forecast 83 or 83. I forecasted 83. And then now it went to it went past 46, almost 47. So I don't want to be too optimistic. So at the end of the month, maybe it go to 87, maybe. So, but next month I'm gonna still keep to 90, and at the end of the year I'm gonna keep 99, and unless unless it get closer and the Kalshi market is show different, because the Kalshi market right now is still show higher than $100. At the end of the year only 36%, and higher than $90 55%. So we know they're gonna be at the end of the year gonna be higher than $90, but we'll see how much higher, if it is gonna touch $100 or not. So, but today a pretty good news. Everything went up. Solana went up, Ethereum went up, Bitcoin went up $5,000 in one day. It's wow, it's amazing. So, and see, low today went up too, and I was looking low up because today low it's PKW is coming down, but today Moderna doing really well. Moderna today Moderna went up 167% because they find a way to make like personalized vaccine to cure cancer. That's why their stock went up so much, from 62 to $174. So today really good news, especially especially the healthcare industry. S&P 500 went up about 0.21%. Dow Jones Industry 0.22%. Nasdaq Composite 0.16%. Gold went up 0.7%. Now at about 4,500. Yeah, it on the way to 5,000. So gold is doing well too. And the oil went up and coming back down and stay around 84, 85. SpaceX it coming back down. I guess the high value bought tech companies not doing that well today, especially SpaceX. We look at the interest rate 1 month T-bill 3.69%, 1 year T-bill 3.96%, 3.967, and 10-year treasury yield is 4.65%. 4.65% is, let me think, 4.65%. So this is like like connected to mortgage. So if the 10-year 4.65%, the mortgage is about 6.65, around that area. Yeah, because that 10-year treasury yield they use for that, for mortgage rate and also corporate rate. Also 30-year bond, it fall down tremendously. It fall down a lot, so now it dropped to 5%, 195%, 5.195%. Yesterday was 5.3 something, 5.31 or 5.35. So it's coming back down. That's good news. That's why it made everything went up today, except quite a few, of course. And Moderna is something different. Moderna is, imagine if you spend $60 today on Moderna, you get 174. So, yep, really good news. Let's see a deeper investor focus breakdown of today's finance news. Wednesday, August 19, 2026. 1. Treasury intervenes as long-term yields spike. This is probably the most important market story today. The U.S. Treasury announced that it will double the size of certain liquidity support buyback for 10 to 30-year treasuries, increase them from $2 billion to at least $4 billion per operation between September 9 to November 4. The announcement came after the 30-year treasury yield hit about 5.34% Tuesday. It is the highest levels in 2007. After Treasury's announcement, it dropped roughly 10 basis points toward 5.19% to 5.21%. Why this matter? Treasury yields act as a foundation for borrowing costs throughout the economy. When the 10 and 30-year yield climb sharply. Mortgage rate, corporate borrowing cost, equity discount rate rise too. High yields are particularly painful for high valuable technology and growth stocks. Buyback have because Treasury is effectively become an additional buyer of older bonds, improving market liquidity, but this is not quantitative easing from the Fed and does not solve the underlying debt and inflation problem. Reuters noted that the amount is relatively small compared to the overall Treasury market. The market implication short-term bullish on bonds, stock, gold, crypto, but I would not interpret it as the end of bond market problem. The US debt crossed $40 trillion. Treasury data show the US public debt reached $40.047 trillion on Tuesday. Of that, approximately $32.266 trillion is held by the public, while other $7.782 trillion represent intra-government holding. The number is particularly striking because the US debt was about $19.95 trillion in January 2017, meaning it's more than double in less than a decade. The bigger finance issue isn't simply the $40 trillion headline. Its interest expense. The government is now spend roughly $1.1 trillion annually on the interest. And during the first 10 months of fiscal 2026, interest cost exceeded Medicare spending. Wow! During the first 10 months, fiscal 2026, interest cost exceed Medicare. Medicare used to be like the biggest spending, but now, wow, making the debt service the second largest. Interest cost is making interest service the second largest major federal expenditure after Social Security. Okay, so the Social Security higher than the Medicare. Wow. This ties directly to story number one. Investors know Treasury must issue enormous quantity of bonds to finance deficit and refinance existing debts. Greater supply can require high yield to attract buyers. I would watch 10, 20, 30 Treasury auction, weak auctions or shrinking foreign demand could push long yield higher again. The Fed minutes rate hike are back on the table. The minutes from the Fed July 28-29 meeting were noticeable more hawkish than investors were accustomed to earlier in the year. The Fed kept its benchmark at 3.50% to 3.75%, but three policymakers dissented and wanted a 25 base point hike. The minute also said several participants were prepared to raise rates, and many believed tightening could eventually be needed if the inflation failed to move toward 2% goal. 2%. That's important because early in the year, market had expected eventual rate cut. Now the debate has moved toward whether the Fed needs to raise again. However, there's conflict in the data. July inflation moderated somewhat, while the labor market weakening unexpectedly. That's why Reuters reported markets see a September hike as less likely, even though future market increasing price the possibility tighten later in this year. My interpretation, September is probably less important than October and December. If inflation turns back upward, especially because of the Fed may have tightened despite of softer economy, the combination would be dangerous for the risk assets. Stock recover, but rally isn't completely healthy. The major index gained roughly 0.2% today, ending a 3-session losing streak. Falling treasury yields were the main catalyst, but underneath the index there is an important divergence. Part of technology, particularly semiconductor-related names, remain weak while healthcare performed extremely well. That tells me today rally wasn't simply investors become bullish again. It was heavily influenced by falling yield and several enormous individual stock moves. The 30-year yield is still above 5%, so pressure on expensive stock isn't disappear. Investor takeaway. I would pay more attention to Nasdaq and semiconductor stock regain leadership than 0.2% S&P move. Moderna cancer vaccine result may be a genuine biotech breakthrough. Madonna Maverick reported that their personalized mRNA melanoma vaccine used for Maverick used with Merck's Keytruda met the primary endpoint of a late-stage study involved recurrence-free survival and prevention of cancer spread. The market reactions were extraordinary. Madonna's share surged as much as roughly 160% intraday, while Merck gained around 12%. Reuters report Barclays estimate melanoma cell alone could eventually reach roughly $3 billion by 2035, while investors cited Moderna's COVID vaccine, Pru mRNA technology could work extremely well against infectious disease. The enormous unanswered question have been whether mRNA could become an important cancer treatment platform. A successful phase 3 cancer vaccine could fundamentally change Moderna's valuation because the company could potentially apply the technology to multiple tumor types. There is still risk. Reuters notes that detailed data, including safety, overall survival, manufacturing consideration, will matter before commercial potential is fully understood. This is one stock story I would keep on the watch list rather than chase after 100 plus one-day move. All about $90 created a serious fat problem. The crude oil settled at 91.62 and WTI finished around 85.83, both their highest closing July 24. The main reason is continued Middle East instability and uncertainty surrounding shipping through the Strait of Hormuz, one of the world's most strategical important energy routes. The market implicates go beyond energy companies. Higher oil, higher gasoline and transportation costs, higher inflation, potentially higher the Fed rate. So oil is becoming one of the most important variables connecting geopolitics, inflation, treasury yield, and stocks. If Brent ostensibly move toward $100, I would become significantly more cautious about inflation and interest rate outlook. 7. Gold. Gold exploded higher as yield and dollar fall. Gold jumped more than 3% intraday after Treasuries bonds buyback announced sent long-term yield and dollar lower. That relationship makes sense. Gold pay no interest when the Treasury yield rise sharply. The investor have more incentive to own interest-bearing bond instead of gold. When the yield drop, that opportunity cost falls. At the same time, a weaker dollar typically support commodity price in dollar. Gold also continue to benefit from geopolitical uncertainty and concern about the government debts. Interesting signal seeing gold, Bitcoin, and stock rising simultaneously suggest today's move will likely react to a lower yield and weaker dollar rather than a normal risk on versus risk of valuation trade. Target turnaround appear to be 2025 gaining track. Target reported 3.8% comparable sales growth, with custom traffic rising roughly 3.6%, digital sales grow 8.7%. It raised its annual sales outlook for the second time this year. Management have been lowering price, improving stores, adding merchandise, and investing in digital operation. One caveat is important. Target profitability also benefit from almost $1 billion in tariff refund. So investors shouldn't assume all the earning improvement from the underlying retail business. Still rising traffic is an encouraging signal because traffic tends to be harder to manipulate than earning. Broader economic signal. Consumer hasn't completely stopped spending, but they are increasing selective about value. Lowe's tell a different consumer story. Lowe's earned $4.27 per share versus $4.22 expected, but the sale roughly $25.96 billion missed the $26.19 billion estimate. Comparable sales rose 0.2% versus expectation of approximately 0.8%. Most important, Lowe's reduced its full year comparable sales outlook to approximately flat, compared with earlier expectation of up to 2% growth. Consumers are still repair homes, but many delay expensive renovation projects. That closely related to mortgage rate. Home owners sitting on old 3 to 4% mortgage and reluctant to sell and replace them with substantially high rate mortgage, suppressing housing turnover. When people buy home, they typically renovate them. Lower turnover therefore hurt Lowe's and Home Depot. What could change this? A meaningful decline in mortgage rate would probably help housing related stocks significantly. Bitcoin crypto regulation may become much clearer. President Trump used a White House gathering crypto executive to urge Congress to pass he called a fair version of Clarity Act. Executive from Coinbase, Robinhood, Kraken, and International Exchange attended. Fundamental goal to establish clearer boundary between SEC and CFTC jurisdiction. The determine when digital assets should be treated as security versus commodity. This is potentially very bullish for the industry because regulators uncertainty have historically described bank, pension fund, and other institution from expanding aggressively into digital asset. Separately, SEC proposed a new crypto framework this week that could create exception and clearer pathway for token issuer. But the Clarity Act is not yet law. Significantly, political disagreement remain, including ethics provision, stablecoin rewards, and DeFi regulation and anti-money laundering requirement. The big picture I see today, almost everything come back on one chain of event. 40 trillion federal debt, enormous treasury issuance, higher long-term yield fall, higher long-term yield, pressure the stock and crypto housing, treasury increase buyback, yield fall, the stock Bitcoin gold rebound. Middle East tension, higher oil price, inflation risk, the Fed consider hike, renew risk of higher yield. So there are currently two competing forces. Bullish treasury support, falling yield today, improving retail result, possible crypto legislation, and strong biotech innovation. Bearish, $40 trillion debt, 30-year yield still above 50%, oil price about $90 for Brent. A Fed openly discussed additional rate hike and persistent pressure on expensive technology stock. For your portfolio, the 10-year, 30-year treasury yield, oil may be more important right now than the daily S&P 500 move. If long yield continue falling, it will support till SPY, QQQ, Bitcoin, Solana. If 30-year yield started heading back toward 5.3, plus while oil push toward 100, I would treat it as a meaningful warning signal about risk asset. Alright everyone, today that's all I have. We see Solana still doing well, about 85.41.42. So today actually we doing well, and like I say, the price so volatile, and it going up today doesn't mean tomorrow it coming down or tomorrow it still go up. So we never know. So, and the day-to-day volatility, it's just one of those things. As an investor, we're not too worried about that much. We already know that the prediction at the end of the year, it should be 90, like around 100, maybe 99. So, and for today increase make the $99 at the end of the year is pretty much a easier reality to get. Thank you everyone for watching. I see you in the next episode. Bye bye. Bye bye.